Welcome back to another episode of Crypto, your go-to podcast for everything XRP. That's right. If you're looking for the latest updates, insights, and analysis on all things crypto, you've come to the right place. Today, we're digging into why XRP saw that noticeable price dip recently. And don't forget to subscribe to our channel so you never miss a game-changing moment or any breaking news. That's right. You shared an article from TradingView News that really breaks down the factors behind it. Yep, the one titled, "Why is XRP Priced Down Today?" Exactly. So our goal here is to unpack those reasons, figure out what's important, and just give everyone a clear picture without, getting lost in the weeds. Couldn't have said it better. We're focusing on that piece, and the key question is really what caused that 4% drop for XRP down to 2.7 back on April 7th. Let's get into it. Okay, so first thing that jumps out from the article, XRP's slide wasn't like a solo act. No, definitely not. It was part of a much bigger downturn across the whole crypto market. The article really lays it out. You had Bitcoin down 2%, Ether lost over 3%, and then some others, Solana, Cardano, Sui, they actually saw bigger drops, all over 5%. Wow, okay, so pretty broad hit them. Yeah, it's just a wider sort of risk-off feeling impact. Well, pretty much everything in crypto. So this wasn't just a minor blip. Sounds like a pretty significant pullback across the board. The global crypto market cap even dropped, 2.6% down to $2.64 trillion. Exactly, that's a huge chunk of value. Yeah, and it really underlines something important for listeners, I think, which is that assets like XRP, they rarely move in a vacuum. Right, they're tied to the bigger market moves. Precisely. When the whole market feels that pressure, it tends to pull most assets down with it. Makes sense. Yeah. So what was actually driving that wider market downturn? The article mentions a couple of big things like uncertainty around US-China trade talks. Yeah, that was definitely a key factor mentioned. Okay, so what was going on there exactly? Well, around April 16th, the article notes, President Trump mentioned being open to a deal, but also kind of put the ball in Beijing's court. Ah, okay. And even though talk of a deal might sound good, the uncertainty it creates actually makes traders pretty cautious, so they pull back. Yeah, they adopt what's called a risk-off stance. Basically, they prefer to sit on the sidelines, wait for things to become clearer before jumping into riskier assets like crypto, right? That classic wait-and-see approach. People get hesitant when big global stuff is up in the air. The article even mentions analysis from QCP Capital. What did they say? Yeah, QCP Capital. Their take was interesting. Titled, "Olive Branch or Retreat," they pointed out a bit of a contradiction, actually. Oh? Like you have the public posturing, both sides sounding tough, but underneath there were maybe some small signs of easing tensions, like the US giving some tariff exemptions, China maybe canceling some retaliatory ones. Interesting. Some mixed signals. Exactly. It shows how quickly these geopolitical nerves can spread even into markets like crypto. Investor confidence can be, pretty fragile sometimes. Those like strategic ambiguity, both trying to look strong but keep options open, must make it really hard to market moves. That's it, precisely. QCP noted, Washington wants leverage. Beijing needs flexibility, but neither wants to look weak. It creates this fog of uncertainty, and uncertainty pushes people away from risk like crypto. Exactly. Okay, the article also flagged something else contributing to this risk-off mood: export restrictions on NVIDIA. Now, for people maybe not super deep in tech, why is NVIDIA such a big deal here? Why would that affect XRP? That's a good question. So, NVIDIA is huge in AI and tech, right? They make those powerful GPUs, the graphics processing units. Yeah, for gaming and AI stuff, right? Right. And those GPUs are critical for AI, but also used in some crypto mining and developing related tech. So when a major player like NVIDIA faces export restrictions, it can signal broader economic worries or potential disruptions in tech. Ah, okay. So it's a ripple effect. Worries in one major sector can dampen confidence overall. Yeah, exactly. It can make investors nervous about risk assets. Assets in general and cryptocurrencies fall into that category for many. Gotcha. And the article points out this risk-off mood even pushed investors towards safe havens like gold, which was hitting record highs then. Right. That really provides context. When uncertainty rises, money often flows to assets seen as stable, like gold. Its price going up just reinforces that flight from risk. Okay, so we have the macro picture. Market downturn, trade jitters, tech concerns. Let's switch gears a bit to the technical side. The article mentions a rising wedge pattern for XRP. For those of us maybe not chart experts, what is that and why is it usually bad news? Okay, yeah, the rising wedge. So imagine you're drawing two lines on a price chart. Both are sloping upwards, right? But they're also getting closer together, converging. Okay, the bottom line connects the higher lows. The top line connects the higher highs. But because they're converging, even though the price is making higher highs, the range is narrowing. It often means the buying momentum is fading. Sellers are stepping in more actively at those higher prices. It's like the climb is getting harder, losing steam. That's a great way to put it. It's losing upward momentum. And in technical analysis, this rising wedge is often seen as a bearish reversal pattern. It suggests the trend might be about to shift downwards, and the pattern usually resolves how? It typically resolves when the price breaks below that lower trend line. That's the signal that selling pressure has likely taken control and a price drop could follow, and the article says that's exactly what happened with XRP. It confirmed the pattern when it closed below the support line around $2.15, correct? That break below the lower line was the confirmation, the bearish signal. Exactly. And after that break, the article notes XRP started testing the $2 level. And interestingly, that broken support line, the bottom of the wedge, it then seemed to act as resistance when the price tried to bounce back around April 15th. So what was support becomes a ceiling. That's common in charts, right? Very common. Yeah. Support often becomes new resistance. Fascinating. So the broken wedge didn't just signal a drop, it then kind of prevented a recovery too. The article also mentions a key support level to watch around $1.90, like a potential floor. Exactly. $1.90 was likely an area where buyers had stepped in before, so it's a logical place to look for a potential bounce. But the article also warns if the price breaks below $1.90 decisively, especially with lots of trading volume, then the drop could accelerate. Potentially. Yes, it could open the door to further downside. And speaking of downside, the article mentions some pretty significant targets based on this wedge pattern, like down to $1.73 or even $1.60 such. That starting point of the wedge. That's right. That's a potential 23% drop from that 2.7 price mentioned. That really underscores how important these technical patterns can be. It certainly does. These targets are usually estimated by taking the height of the wedge at its widest point and projecting that distance down from the breakdown point. It's a standard technical analysis technique. Okay, the article also brings up the RSI, the Relative Strength Index. What does that tell us? And what was it showing for XRP? Right. The RSI, it's a momentum indicator, basically helps gauge if an asset is overbought or oversold. It runs on a scale from 0 to 100. Generally, over 70 is considered maybe overbought, possibly due for a pullback. Below 30 might mean oversold, maybe ready for a bounce. And for XRP, the RSI had dropped quite a bit from 67 down to 48 over the previous 3 days. Okay, so moving away from that potentially overbought zone. Exactly. And that decline signals increasing bearish momentum. It suggests selling pressure was building up. So not only the price pattern, but also this momentum indicator was pointing towards sellers gaining control. Correct. It added another layer to the bearish picture. The piece even includes insights from an analyst, Cassie Trades. What was their take? Yeah, Cassie Trades sort of echoed the technical view. They highlighted that lower trend line of the wedge around $2.17 acting as strong resistance, right? That support turned resistance idea again. Exactly. It lines up with what the pattern suggested after the breakdown. It sounds like Cassie Trades was also being a bit cautious, waiting for more confirmation. Precisely. They pointed out that without a clear new high or a new low being made, the next big move wasn't really confirmed yet. They were saying, we need more decisive action to be sure about where it's heading next. Makes sense. And did trades mention those downside levels too, if that resistance held? Yes, they did. They pointed to 190 as a key level to watch, which we discussed, and also mentioned an even lower level, $1.55, as potential support if the selling continued. Okay, so we're seeing different technical viewpoints kind of converging on similar important price zones. Exactly, right? You have the wedge pattern itself, you have the RSI showing weakening momentum, and you have analysts looking at those key levels. It all paints a complete picture of why the price moved the way it did. Okay, so let's try and pull this all together then. It sounds like XRP's recent dip wasn't down to just one thing. It was more like, well, a combination of factors stacking up. I think that's the right way to look at it. You had the whole crypto market generally heading down. Yep. The broad sentiment driven partly by those bigger economic worries like the US-China trade stuff and the NVIDIA restrictions creating that risk-off feeling, right? The macro backdrop. And then, layered on top of that, you had these clear bearish signals coming from XRP's own price chart, especially that rising wedge pattern breaking down. That's a great summary. It really shows how these different forces connect. Global events shape the mood. That mood affects asset prices. And then, technical analysis helps us maybe understand and anticipate those price moves. And understanding that interplay, that connection is really useful for our listeners, isn't it? It helps make sense of why prices move in crypto or really any market. It's often part of a bigger story. Absolutely. It encourages you to look beyond just one asset, its chart, and consider the whole context. So, thinking about all this? The mix of global politics, tech news, market psychology, it makes you wonder how could unexpected news in any of those areas shake things up again for XRP or the whole crypto space, in the coming weeks. That's the million-dollar question, isn't it?